Okay, hey, it's me, Rob Ryan, and I am back for another episode of Entrepreneurial Thinkers. And if you are interested in the venture capital community in Mexico, if you're an entrepreneur or a limited partner and an institutional investor, as they say, or another creative venture capitalist who's looking at opportunities in Mexico or Latin America, or has maybe opportunities in your portfolio from Mexico and Latin America and looking how to get into US markets, this episode with my friend Alejandro González, managing partner from Redwood Ventures and Santa Terra Capital, is incredible. First of all, it's super enjoyable for me to go back and visit with a longtime friend and collaborator there in the Mexican entrepreneurial economy, who I haven't seen in person in a couple of years, and who we haven't had this kind of a long, in-depth conversation about the industry and the trajectory and the future of venture capital and the entrepreneurial economy of Mexico and how it relates to the opportunities with Latino markets in the US. I haven't had that opportunity with him in a long time, so it was really joyful for me. But if you're interested in any of these things, the fast-growing Latino, Hispanic, Spanish-speaking markets and opportunities in the US, as well as, again, cross-border opportunities, and then just the trajectory of kind of how we've gotten to where we are in Mexico and where we're going, this is the episode you want to listen to. So I hope you enjoy listening to it or watching it on YouTube as much as we did making it for you. Hola, hello, hi, bienvenido, and welcome back, or welcome to Entrepreneurial Thinkers, the show where I get to have weekly conversations with the best and brightest entrepreneurial thinkers across all segments of society and industry as we come together to try and leave this world a little bit better than we found it. Today, I'm super excited to be joined by my friend Alejandro González, the managing partner at Redwood Ventures and Santa Terra Capital. Aside from being a longtime friend, as I said, and a former client of mine in my past consulting life in Mexico, Alejandro brings years of experience and expertise in finance and a natural knack for human relationships to his work, helping to build and professionalize Redwood Ventures, which was one of the earliest pioneering venture capital firms in Mexico. After graduating from Universidad Panamericana and setting out in his early career in financial management and analysis, as well as investment banking, Alejandro joined the Redwood Venture founders to professionalize the firm and set them on a course to raise multiple funds and become one of the more innovative and active investment firms across the region. His presence has helped the firm to develop a stellar reputation with both its institutional investors, as well as for being active locally across Mexico in its founder communities and building deep relationships with entrepreneurs. He's a great husband, a proud dad, and an active member of his community in Guadalajara. And he joins us today to discuss an exciting new partnership that his firm recently formed, as well as opportunities in the food industries as they see it through one of their dedicated sister funds, and opportunities as he sees it for the firm kind of in this more normalized financial environment that we're operating in post-pandemic. And he's going to give us all those insights into all these topics and more. Ale, it's great to see you, buddy. Welcome to Entrepreneurial Thinkers.
Thank you very much, Uncle Rob. That's a great presentation. I couldn't say it in a more flattering way.
It's your career, so I'm just reading it.
I'm gonna record that. Oh, you're recording it, so I'm gonna take that. I'm gonna take that and show it to my LPs.
I love it. There we go. It'd be a pleasure to have you share it.
Thank you very much for having me.
No, it's great to see you. And personal aside, in addition to my Tio Rob title now as of 10 days ago, I am officially Abuelo Rob now.
Oh my God! Congratulations! That's great news.
Yes, it's a little Leo has joined the world. My daughter's first child, my
Amazing.
First grandson, my first grandchild, so grandson. So yeah, we're pretty excited, and this is week 2 of his existence. So everybody is still getting used to him. So I've just got another layer of responsibility on top of my uncle responsibilities to the world.
Congratulations!
Thank you. So hey, I want to jump right into it because we've got a lot of ground we want to cover, and there's a lot of cool things you guys have been working on, which is really kind of the impetus for inviting you onto the show today. So first things first, let's kind of frame up the world that you play in, right? We could say that venture capital as a category, as an industry, was kind of a fantasy, like as recently as, say, 10 years ago, right? So 2014, I don't know that there was a venture capital industry per se, as much as maybe there were 1 or 2 or 3 people that listed themselves as venture capitalists. So comparing that to, say, the venture capital world as we know it in a global way, started in the US here in Silicon Valley about 50 years ago, roughly. As Mexico and LATAM kind of moves into its second decade now, Talk to me about how you see the markets evolving. How do you see things changing and shaping over the next 10 years?
Absolutely. So the first thing that I want to say is that we are not part of the first, sort of like the first cohort of venture capitalists. That was probably 2011, 2012. That's when the first batch of venture capitalists started in Mexico. You know, the Angel Ventures, the RVPs, the first batches of 500 startups, all of those come from back then, and they definitely helped paving the way for the rest, and detonated the ecosystem. So I remember my first approach to venture capital was probably in 2011, back when INADEM was going on. You know about INADEM. So
Sure.
that was back then. We started fundraising to invest with Mexican money in Silicon Valley, and we rented an office in Hamilton Road in Palo Alto. But I noticed that in the building where we had our co-working space, there were 12 venture capitalists. And the Amex cap had 11 venture capitalists in the whole Mexico. So it was very early. We ended up not fundraising for that fund back then. I started in investment banking, doing other stuff, invested as LP in other funds, and eventually in 2018 we started investing with Redwood Ventures. So Redwood Venture is maybe in the second cohort of the Mexican venture capital ecosystem, and now we're in a third that have much more funds going, like active, and the first funds are very mature now, probably by the fourth or
See,
fifth fund. So that's how so the whole evolution of the ecosystem, it's very, I would say, like, I think the fact that we have a pandemic in 2020,
a little unexpected intermission, right?
that shaped the whole ecosystem as it is right now, because we were
Okay.
growing so fast, and much more funds going on. And then in 2020, 2021, everybody wanted to be a venture capitalist. There was a huge amount of startups coming in, like starting, and venture funds from all over the world came to Mexico and Latam, and they saw the ecosystem and what was going on. So it probably push the ecosystem forward much more than 2 years, so those 2 years basically accelerated the whole ecosystem a little bit,
Okay.
I think maybe 1,000, 2,000 startups in just 2 years in Latam. I'm just saying numbers, but probably was even more than that. Then a lot of venture capitalists started operations, and a whole lot of new ventures, or also corporate venture capital starting. And the way 2022 affected the ecosystem, and 2023, is that the shortage of capitals made a wipeout of all the venture capitals. There was
Okay.
basically there was a cleanup of
Yeah.
venture capital.
So we had this like trajectory of really hyper growth pre-pandemic. Then the pandemic becomes this artificial kind of interference, and then coming out of that, it's starting to pick up again. But then we have this, and actually we were going to talk about it later in the show, but we can bring it forward and talk about it now. So we had this what I call kind of more stark, like post-pandemic, financial reality, right? The cheap capital, zero interest rate environment of macroeconomics was gone
Yeah.
worldwide, and so now what you're saying to me is now that's where it's at, and it cleaned out a bunch of kind of players who didn't have the wherewithal to last or sustain or raise more money. And
Yeah,
so
and
did it contract massively, or did it just kind of clean out a little bit and now?
it contract massively,
Okay.
mostly because the big funds are not from Latin America, and they were maybe, I don't know if the right word is like tourist in Latin
Yeah.
America, but it
Yeah.
gives the sense of, like, they were exploring, and they were bringing what for Latin America at that stage was a huge amount of money. I think the venture capital investments in Latin America in 2021 or 22 was more than $10 billion, when in the past, like 3 years before, when we started in 2018, like when we reached 1 billion was like a huge deal,
Yeah.
and the next year was 4 billion, and that was because of Rappi, and everything started growing like really fast, so everybody got excited, and there were a lot of venture capitalists that started doing that when it was fun. Like it was very fun to be a venture capitalist in that environment. A lot of capital, a lot of deals going on, all the news every day. Everybody wanted to, like have a podcast, like they wanted
Yeah,
to, like,
exactly. Yeah.
so it was, but then in 2023, it stopped being fun. There was no rounds, there was no M&A, there was like everybody wanted to, keep the high valuations. They were not there anymore. So the people that were doing venture capital for fun, a lot of them decided that it wasn't fun anymore. So they wanted,
That's fun.
they,
They'll go
you
do.
know,
They'll go back to investing in apartment buildings or farms or something.
Yeah, so when you see the numbers from LabCa or other associations, you see that the number of venture capital funds actually got crunched from one year to another.
Okay.
And now in 2024 it's very stable. So what I assume
Okay.
now is that the people that is doing business right now, and the startups that are in business right now, are much more resilient, and are playing the long run, and they're looking at things as an actual business and not a hobby. So I would assume that we now have a much stronger ecosystem that has gone through a lot, now have learned a lot, and is trying to do business the right way,
Yeah.
and it's and they're doing this not like a lifestyle thing,
Yeah.
more like a something that is their business, like what they want to do in the long term. So I think our ecosystem now is very, very mature. There is a lot of players that we didn't have. There's a lot of interest from corporations in start doing commercial relationships with startups, which help a lot for M&A activity, business having actual like viability commercially, and that is also strong for the business case of venture capitalists actually injecting capital in LATAM. This is a very different ecosystem in LATAM than it is in other regions like Silicon Valley, New York, Israel, where innovation is, like state of the art and top notch, and it's things that you have never seen before. In Latin America, there could be huge businesses just lending money to people in a digital way. That's
Okay.
there's nothing innovative about doing that, except that no one else wanted to do it before. And there's a huge business, and there are a lot of money doing very like incremental innovations, which
Yeah.
probably have done before in other parts of the world, or there wasn't even necessary to do something like that in other parts of the world because the whole infrastructure is built. But here
Right.
in Latin America, we're lacking a lot of infrastructure. So innovation is not like this big disruption of like catching rockets midair with a crane. Here, like here in Latin America, we innovation is just sometimes bringing services to the people that they don't have access to those services. In Silicon Valley, they see the kind of innovation that is going on in Latam, and they see like they probably don't see the level of opportunities that we as Latin American venture capitals are able to detect. And I think that is the core difference of the venture capital
Interesting.
industry in Latin, that we have understood so far what is the venture opportunity for Latam, and it's not the same than other places. So that's maturing, and you see
Yeah.
a lot of a lot of funds investing in those kind of businesses and doing very good.
That's awesome. Thank you for that. I mean, that like the depth of that analysis is fantastic because, like as I was listening, you used some of the words I was going to use, right? So it sounds mature, right? It sounds like the serious players are the ones that are left. It sounds like we've moved past the stage of this just being a playful pursuit for rich people, right? And that's healthy for returns for your investors in your funds. It's healthy for the entrepreneurs to have more sophisticated, serious people as their investors who can really understand how to help them. And then that differentiation that you just noted on understanding kind of what the unique value proposition is of the Latin American or Mexican, in this case, venture capitalist to its market, right? That's a big one, right? Because even me, like I as you know, we spent a lot of time in the region together, but it's been since the pandemic that I haven't been back, right? I mean, I've been there virtually like this, but not on the ground. And so even to me, there was a sense that back 2018, 2019, 2020, and everybody there was still kind of chasing, like trying to be like the American VC, right? Or trying to be like the European VC and with a little bit of like local flair, right? And for you to now say very, very particularly like, hey, I think we've learned that what we understand about our market is what makes us uniquely valuable. And then therefore we're going to be able to create returns where other market investors would probably look at some of our opportunities and dismiss them. We know how to nurture those opportunities, and we can create huge billion-dollar businesses delivering these types of services or products to the market need, which again, that's a huge win for your limited partner investors. That's fantastic. Thank you.
Yeah, and again, I don't think the ecosystem is mature yet, but I think the players,
I would say maturing
yeah,
sounds like it.
like we as players have learned a lot. So we understand that that ecosystem is definitely not mature yet. We're evolving every day, but we see those opportunities. And you mentioned one thing that I probably disagree that is a $1 billion business. I think one other thing that we have learned is that we cannot play this game just to find $1 billion businesses, because in Latam you don't need a $1 billion business to make huge returns. Like if
Sure,
you
that's
if,
fair.
if, like for us, like we have a $40 million fund in venture. So with a $40 million fund, you don't need a unicorn to deliver 3x, 4x, 5x, 10x the fund for the investors. So like
Right.
uh, you just need like in our first fund, it was a $10 million fund, depending on the exchange rate because it was in pesos. But we returned the whole fund to the investors and a little bit extra just with one exit, and it wasn't even close to the $1 billion exit, but
Yeah.
the returns were 25x to the investment. So you can
Right.
return a fund with a 25x, and you don't need a $1 billion deal for doing that. So Latam is in another
It's a great
stage.
point.
It's in another stage. You know.
Yeah, no, it's a great point. And also to your point too, right? I mean, there's no way to call it matured, like as if it's like, oh, it's all done in year 12 or 10 or 12 or 13, right? Like as we were talking about before. So the truth is, like, I would now say, based on what you just described, it's actually really encouraging for the next 10 to 20 years for the venture market, because if you guys are figuring out, and you, the collective, not just Redwood, right? If you guys are figuring out some of these lessons and some of the value propositions and some of the how to manage the financials of it unique to you already,
Mm-hmm.
kind of in year 10, 12, like that's really encouraging for the next 10, 20, 30 years, right? Which is again, both good for the economies, but also great for your limited partner, for your investors, which is the
Absolutely.
business, which is the
Which is the
business you're in,
business.
of course.
Yeah.
But that is the
Absolutely.
business you're in. Yeah.
You don't
So
have to lose
let's
sight
not,
of that. Like if you don't make
yeah.
money, you could have a lot of fun, but if you don't make money, this is not
Yeah.
a business.
No,
so
100%,
so that's
100% true. 100% true. All right, so we're gonna jump right into the meat of it, because one of the things, and there's a couple different layers of unique things that you guys have done and are doing that we're going to get to, but I want to put the most recent announcement right up front, because by the time this episode releases, this announcement will be a couple months old. So there's some context there, but it was a big deal. It caught my attention, so I want you to talk about it. So I was reading last week or a week or two ago that boom, like my buddies at Redwood have formed this big strategic partnership with Seed Stars, which is a very reputable organization, fun combination of things that they do, that I knew very, very well. And I knew some of the people at Seed Stars that were in Mexico or in Latam over the years. And obviously, hugely reputable organization out of Europe. And I immediately looked at just the graphic images on the social media and I was like, wait, what? Like, wait, hold on a second. Wait a minute. I've got to have somebody on the podcast to explain this because this has the potential to be fascinating and also like potentially hugely beneficial to the entrepreneurial economy of Mexico. So there's your platform. Tell us all about this. You guys cut a big deal with Seed Stars. Like, tell us the whole story.
Yes, we're very excited about it. So this started, I think probably like 2 years ago or almost. Seedstars, as you mentioned, is a global platform for emerging economies. They promote entrepreneurship all over the world. They have programs in many places in Latin, many places in Europe, MENA. They have offices in Africa. They have like they they're everywhere. So we have collaborated with Seedstars for years, and probably 2 years ago they started a fund of funds. But the fund of funds is and I don't want to put words in their mouth, but it's a way to detonate the emerging markets that they're looking at with potential.
Sure.
A part of what they do with the accelerator and their programs and their mentors and everything else that you know about. So what was interesting for us is that we could have this huge platform of great mentors, great investors, great entrepreneurs, all the muscle of this organization, but also have their trust with with an investment ticket.
Yeah.
So they say put your money where your words or where your mouth is. I think that's the
See, see,
saying.
see, see.
So
See, yeah.
so
Yeah.
I think that was interesting, and it was sort of like a contest. They were looking at many funds, and we passed through a long negotiation on terms and everything. I don't want to bore you with the details, but
No, that's okay. Yeah.
what ended up happening is that we have a very good deal where they invest in the fund. They help us in the investment committee. They I have almost daily meetings with them. We have a lot of deal flow coming in from the network, but also our deal flow goes to their network. So this is a real community. And
Wow.
for us, the probably most powerful thing is that our portfolio companies can be part of their network. So they have
Okay.
access to all their they call it the co-investor platform because they have a huge network of other funds that
Sure.
for the next rounds, Series A, Series B, you cannot find in emerging economies Series B or Series C funds,
Right.
those large tickets are normally in more developed economies. So they have this network where our companies can be visualized by those kind of funds,
Hmm.
and help us with the fundraising for the companies that are doing great. And you would see in all the successful companies in Latin America, when they go to a series, maybe even Series A, but I would say Series B is very difficult because you have to build this network of funds outside your region, not only outside your country, outside your region, the whole continent, and
Yeah.
where they probably haven't seen you before. They don't know your brand. They haven't never buy something from you, and like even I would say probably one of the most renewed companies in Latam, which was Rappi. I'm pretty sure that when they went to Dubai fundraising, nobody know who Rappi is,
Right.
even though they are
Sure.
probably the biggest startup in Latam. But maybe Luwak. But like those kind of things, you need a global network to have visibility of your companies. So in Redwood, it was a major deal to have someone like Sisters trust us and be part of this network. But they also bring a lot of other things like they have I think like 4,000 people, global network of mentors in many different areas. They have other funds in other continents that have also received funding from them. They have a huge platform of like growth methodologies. They have a lot of like technology, like all the systems that you need to measure your
See,
growth and KPIs. They have ESG policies. They have a marketing team, HR
it's
team.
it's it's almost like it sounds like. Sorry to interrupt you, but it almost sounds like if we had sat down in 2022 and whiteboarded out like in a room with you, all of you guys and your investors, and like whiteboarded out like what would Redwood maximum look like on a global scale if we won the lotteria and we had no limitations and we could dream the biggest dream. What would our venture capital firm look like globally? It's almost like you were able to essentially buy your way into that kind of superstructure in partnership. I mean, without having to buy in because they bought into you, like they came to the market, but
Yeah,
you have this strategic alliance that allows you access to all of these different pieces of the platform that accelerate your ability to execute those types of services and those types of offerings and that type of support for your founders and flexibility and it widened the aperture. It sounds like to me like it widened the aperture and maybe
sure.
jumped you ahead a few spaces in line that you didn't have to necessarily go create on your own.
Yeah,
Is that accurate or my
like I think we already had the vision of doing that. Like we already tried to provide some kind of like recruiting services for the portfolio. We have our perk portfolio. We have our commercial partnerships. We have to create this ecosystem for the portfolio. Uh, we try to nurture a lot of relationships with bigger funds. So we already do that, and we have a vision of keep doing that for years. But I think this accelerated a little bit the process. So now we probably skipped 1 or 2 years of building that relationship and all that network by partnering with sisters because they already done it. So I think we probably just jumped some like very important steps in the way,
yeah.
and that's the platform. But I mean, like this doesn't mean that we're done. Like we have to keep building.
No. Yeah, I didn't mean
So
that.
so
Yeah.
yeah. So I just think that this is beneficial for the ecosystem as a sample of that Mexico can
See.
have worldwide reach, and partnering with the right people is good. And we have always had the philosophy of collaborating. Like we don't want to. We understand that we cannot do everything ourselves. So
See.
collaborating with sisters, collaborating with our LPs, with other funds, we're part of like a lot of like funds network and everything. So we try to collaborate a lot, and this is one of the things that make us proud about sisters, which is I think sisters also saw in Redwood a partner that can provide that network for them as well. So
Yeah. It's awesome. How
I think
exciting.
we are both excited about the partnership. I think they entered in Redwood at a great stage because they have they have done very good with Redwood. so
Yeah.
yeah, I guess this is the point of doing partnerships, to be
That's
symbiotic and
amazing.
beneficial for everyone.
It's super creative, and we're going to talk about one of your other partnerships in the food CPG industry in a little while. But before we get that, we're gonna hone in on this. I mean, first of all, congratulations! Like as a friend and a mentor and a ally who's been around you guys since the very beginning. This to hear this story for the first time after seeing the press release stuff, like this is incredible. Like it's a tremendous opportunity for you guys to build your muscles while also continuing to keep the unique value proposition and the unique kind of culture vibe that is Redwood, right? Which in and of itself has already always been different than other firms in Mexico or different than other firms in Latin because of who you guys are, like because of the three of you, and then you're the team that you've hired and the type and the, as you just said, the way that you've always been like that. I mean, I can remember even before I met you, meeting Ian and Marco at the very beginning stages, and like they were very much always about like, hey, we know what we don't know, and we want to surround ourselves with smart people who know other stuff, right? And they've always been that way, which always made them a little bit. I mean, there was even like maybe in the earliest days, I can remember hearing, some people in Mexico City might have said, those Redwood guys, like I don't like this. It's just those nice guys from Guadalajara, like they're so nice. Like I don't like almost as if to say like, are they tough enough? Are they smart enough? Are they cutthroat enough? Right? Like they're not ready for the big leagues. And I would go around always defending the nice guys from Guadalajara because I was like, I think they're actually the future. I think they're doing it the right way. You can be you can be co-opetition. You can be collaborative. You don't have to be cutthroat. You don't have to talk down the other firm. You don't have to do that. And that was a sign of your maturity. So this is a great, huge win. Great job. Congratulations.
Thanks.
Let's, while we're talking about Redwood, let's kind of frame up and do a little commercial just about Redwood. So just to be clear, so people can understand it, this is where you can talk about like kind of, the origin story or assets under management, or please talk about your thesis and your focus on industries going forward. There's a Redwood 1 that you've referred to already. And then there is or was a Redwood 2, like kind of give us a snapshot of what the firm looks like today,
Sure.
and then how we go forward.
Sure, I'll make it clear. So we decided to probably play our own game. That's probably why it is so sometimes difficult to understand. But we, as a venture capital manager, sometimes they say like, "Hey, what are you doing like in CPGs and sports and like things that are not venture capitalish?" And I say like, generating returns for my LPs. That's my job, like my job is not about technology. I don't even know technology myself. I'm a finance guy, So my job is, and our job as a firm is to create returns for our LPs. So we're always trying to find creative ways of doing that. We as a firm, we have different verticals. So one of them is Redwood Ventures, which you like is the one that you know. There we have two funds. Fund one, which was a $10 million fund. Fund two, which is $40 million fund, where seed stars enter. And then we started Santa Terra last year, and Santa Terra is a fund that invests in food and beverage CPGs and all the technology that surrounds food and beverage CPGs. That's an $80 million fund, and that fund is funded. All the LPs of the fund are companies, entrepreneurs, business people around the food and beverage sector, both from the US and Mexico. So we have invested in companies of like products that you probably know,
See,
like this one right here, Cure. I don't know if you have heard of Cure, but you should
look at
try it.
this. This is great. We're doing commercials in the commercial now.
Yeah,
This is awesome.
I know, but I know you like walking a lot,
I
so
do. Yeah.
this is great for recovery. So we invested in that, like and they say like, oh, this is not technology and this is not sexy product. They don't grow as much. Like this company is growing 400% per year, and it's
That's
profitable.
that.
So
I don't know that you could grow more than that.
like like this is like for us even surprising that our companies in Santa Terra are growing just as much as the technology companies. So
Yeah.
we're doing pretty good in both. And then we started another vertical that is called Ignite, where we accelerate CPG companies, and that's also doing very good. We have an investment banking division where we help doing valuations and M&A processes and fundraising for very traditional companies, like the kind of companies that been there for years. They make money. They have good margins. They probably don't grow as much, but this is like the companies that 99% of the companies in the world are. Like so.
Yeah.
We do all kind of services, or financial services, for those guys in M&A transactions and valuations and corporate governance, and that's what we do in that division. We also have Redding, which you know about, where we help governments and corporations detonate their innovation and entrepreneurship policies. And we have done a lot for Mexican governments at all levels, and also some corporations. And we have a new fund that is just starting, and we're currently fundraising, that is going to be investing in emerging sports in the US. So there is a lot of
Okay.
opportunity to.
We're breaking news, people. We're breaking
Yeah,
news here
this
on
is
the
breaking news.
podcast
This is
today.
breaking news.
Yes.
I cannot tell you a lot about it, but
That's
it's.
the great answer. Right after you say the breaking news, you always say, "I cannot tell you more about it." But
I cannot tell you a lot about it, but this is probably the one thing that excites me the most right now. There is a huge opportunity for emerging sports in the US. And what excites me the most is that the most of the emerging sports in in the US are driven by Latinos in US.
Yep.
Like the Latinos in US are going to represent 50% of the GDP by
Yeah. Yeah. 100%.
I think the analysis that Bain showed said that 50% of the GDP growth of the US is going to be driven by Latinos for the next I think 25 years. So
Yep.
that's huge. That's trillions of dollars. So
Yeah, you don't have to tell me. I'm sitting here in Los Angeles, where our women's NWSL franchise is the most valuable women's sports franchise in the world, and just took on its new majority investors in Willow Bay and Bob Iger, the chairman of Disney, for $50 million investment on a 275 million dollar valuation, which is by far like the most valued women's professional sports
wow,
franchise across any sports.
wow,
And if you were in BMO Stadium, Bank of Montreal Stadium here in downtown Los Angeles, I can tell you from being there that easily 50%, if not more than that, of the season ticket holders and the audience and the supporters in the stands are Latino. Of course, it's
yeah,
Los
and
Angeles, right?
and so the sports is like a very big industry, but
See,
the growth of sports is going to be driven by Latinos,
yep,
by women, and by young people. So
see,
so
100%.
if you see the kind of sports that are emerging and gaining a lot of traction in terms of fans and media and everything, those are sports played by young Latino women. So
Yep,
that's very interesting
100%.
thing to analyze, and we've seen that. So we're raising this new fund to invest in that category.
That's
So
very,
yeah,
very
that's
exciting.
basically
Very exciting. Now let's go back to Santa Terra a little bit and unpack it. So we started by describing. So we've got two main funds inside of Redwood, where the thesis remains, and this is my word, so you can correct me. The thesis inside of Redwood 1 or 2 remains kind of like general technology.
yeah.
Is that
It's that the TCC is both seed and Series A, industry agnostic, so all kind of technology, but we focus on companies that are building technology that can be translated into entry barriers for their competitors. And
yeah,
entry barriers, we believe, can be created in three ways. One is by the complexity of the technology. The second is by the protectability of the business model, meaning regulation, meaning IP, meaning like all kind of ways. And third, by network effects. So if your technology is able to create one of those three things, and you're raising a post seed or Series A, that's our sweet spot. We invest all over Latin America and also in Latino founders in Mexico, in the US and Canada. And so that's what we do. That's what we do.
yeah.
We have like right now, probably you don't know this number, but we've grown a lot. We have 49 companies in our portfolio. So we're trying to find the number 50. So
Yeah, no, you should. And also, by the way, you're not boring me with the numbers. You're literally the finance guy. Like, I knew when you were coming on, I knew when your other two partners offered you up that we were going to get a lot of numbers, which I love, right? Because if I was talking to one of your other two partners, I'd just get all the salesman stuff, right? Like, this is the real business, which I love. As you said, you're in the business of making money for the people that give you the money. So that's awesome. All right, I want to bring it to me a little bit and kind of give you a chance to talk about the bridge. You just did. Inside of Redwood, you even invest in Latino founders and entrepreneurs in the US or Canada, so in North America, right? I met you guys last in person when you were here launching Santa Terra. Key, no, you were launching Santa Terra as part of the big food expo thing that goes on here in Southern California. You were in Orange County, just south of Los Angeles, and you were here with some of your backers, your partners in the fund for Santa Terra, which is like notably to Los Angeles listeners, the Northgate Market family people,
mhm.
right? And that's like enough said right there. It's just like that's the credibility to go with you, bring in the door or open the door. Sorry. So talk to me about specific to the CPG discussion, right? We both know LA is known as like a global hub for CPG brand opportunities, for food product opportunities. The market is so diverse and so big. But talk to me why you guys in the Santander business, why do you see so much opportunity kind of crossover between Mexico, Latin America, and the rest of the North American market?
Yeah. So the opportunity is in the US because of the big market. And so basically what is going on is that new generations are consuming better products. That's the simple way to put it. So there are three key trends in North America that are shifting the way people consume their food and their beverage. So that's functionality, like people want to consume things that can actually help them work better. The second one is better for you products, so they want to eat healthier and more responsible way. And the third is like heritage products, like people like products that speak to your culture or other people's culture. You know, like people are very
Yeah,
curious, like there's a company or portfolio called Tia Lupita, and Tia Lupita builds like they have better for you Mexican products. So people are curious to like how like cactus tortilla or a cactus chip tastes like, you know, and in Mexico it's very
sure.
common to have cactus products or like very authentic sauces and you know like this. Those kind of products are also very like eh, I don't know if you care about this, but Siete Foods, which is also a better for you Mexican products company, got sold to for 1.2 billion
Recently,
dollars like 2 weeks
right?
ago. So
Yeah.
so there is a huge trend of those kind of businesses, but not only with Mexican products, also with products from I don't know Thai
Could be
food is doing
could
pretty
yeah.
great.
I was gonna say it could be Thai food, could be Vietnamese, could be from anywhere.
Vietnamese food
Yeah,
is doing
right.
great. You know, so we
Yeah.
have a lot of research. Those are the trends that we are seeing. But also
So
the Mexican part,
it's sorry. Go ahead.
yeah.
My part.
No, that
Stop.
like the
Go ahead.
Mexican part comes in when you see that those products are expensive. And so when you notice that the nearshoring effect that everybody's talking about, specifically in the food and beverage sector, has a huge opportunity because the great situation going on in Mexico. We have all the ingredients, we have great ingredients, all the certifications. Like there is basically all like there are no products in food and beverage that cannot be grown and manufactured in Mexico, and the cost is simply lower. Like that's logical, you know. So there's a big opportunity to help those emerging companies that are doing great in the U.S. commercially lower their costs and improve their margins by working with manufacturers, suppliers, ingredient suppliers, and even like agriculture companies here in Mexico, and you know, taking advantage of the nearshoring effect in their specific industry. So we see that there are those opportunities, and there is another opportunity that we have seen more recently, which is that there are great products in Mexico that are thriving, and when they go to the US, they explode. Like they absolutely explode. Like you've
Okay.
probably seen the success cases of like Topo Chico, Tajín,
See.
Electrolyte, like all those brands that are originally from Mexico, they go to the US and suddenly they explode and everybody's talking about them and they want, Tajín in their snacks and like, like
Right.
that's,
Yeah. And
I've gone to many
like
restaurants that they say like, ceviche with Tajín and it's like, they have the
yeah.
brand in the menu, like, so it's a whole thing. So we're looking in
And
those opportunities.
like you said earlier, right? If you could, so you're tapping into some of the heritage buyers who are like, oh, hey, I'm a Mexicana from Jalisco who lives in Los Angeles, and this product is like reminds me of what I used to buy at home or whatever. So you get that, but then eventually you also spread out. The next thing you know, your product is in like Erewhon or Whole Foods, and you get a bunch of people that look like me that are buying it because it's like the heritage becomes like the cool premium product. Plus,
Now,
maybe it's a little. right? And
Absolutely,
I mean,
absolutely, absolutely.
that,
Latino is sexy,
right.
yeah,
Exactly. No,
so
exactly. Right. And it's just, I mean, it's that it's funny because you don't notice it, but so this is who I know, this is our friends at Supply Chain Capital. So this is
yeah,
Norme, who I'm sure Norme and Shayna, right? And their whole thesis is right. The idea that someday 20 years from now, there should be no longer like an ethnic food aisle at the grocery store in the US, right? Where all the ethnic foods are in one little tiny section of the grocery store. Like ultimately, the whole grocery store will be transformed and it will be filled with global products that serve different segments of cultural parts of society. And that's you guys have tapped into that in a similar way. That's awesome. You've mentioned a couple, and I would love to. I know I'm not going to ask you to like pick your favorite child, but like give us a couple examples, either from the Redwood portfolio or from the Santander portfolio. Just give us a couple of crazy, great stories of companies that you guys have helped to nurture from where they were.
yeah. So I give you an example that I have it very fresh because I just received the news yesterday.
Okay.
One of the companies from Redwood 2 called Minu. Probably you heard about them. But Minu is a company that provides access to financial services. So I'll give you the pitch. Is they provide financial health, mental health, and physical health for employees of the companies in Mexico. So
Okay.
there is a lot of studies that say that the main reason for the employees to have rotation is that they don't have access to all these three things. So they put all of them in an app. They give you access to financial services, loans, savings, a lot of things for financial. They give you access to insurance and all those things. They give you telehealth. They give you mental health. They give you exercises. They have almost like a like a gym instructor in the app. So they have all these platform of services that companies can buy for their employees for a very affordable monthly fee, and it doesn't even make a difference. Like this is a no-brainer for almost every company. But what I like the most, and this is about your question, is that our core proposition as a fund that I think differentiate us like from other funds is that all of our investors have companies. So that we don't have like the development bank or the I don't know. So we put together in the table our investors and our portfolio companies so that they can do business together.
It's awesome.
I just learned from the report yesterday that three of the investors that we introduced to them this quarter actually closed a deal with them, and they have I don't know like 100,000 employees in the platform. Like
Right. Wow.
they already have like 700,000, but uh, having 100,000 more in a
Right.
trimester from connections that we did.
That's
That
amazing.
made me very very proud, and I think that's the reason, and that is validation of what we uh, intended to do when we build our thesis around that. So that's
Completely.
that's one thing. In Santa Terra happens a lot. So there is a lot of co-branding deals. There is a lot of supply. So one of our companies is I don't know if you like hummus. There's a
Yeah.
company called Little Sesame. They're from Washington, and they have the best hummus that you have tried ever.
Okay.
And I'm sure to say that, and I can bet that you have never tried a better hummus in your life because I
Wow.
see the velocities. Like I know how much they sell in comparison to other hummus. so
Yeah.
so
Wow.
that's one thing of the CPG sector in the US that you have publicly available data about that. So
Yeah.
I know what I'm saying, and one of our LPs is supplying the chickpea. So so that they have this opportunity of ensuring organic chickpea for their organic humus from Mexico at a cheaper cost, and they basically guarantee the supply. So those kind of things are what differentiates the thesis of our group in comparison to other groups. So we are not
Yeah.
faster, we don't have more money, we are not more smart or more, like just say we're friendly and nice, but I don't think we are the most friendly or the most or the nicest. That's not a competitive advantage. So I think our competitive advantage are our investors, and there are a lot of signs about that. So those are two probably like
Those are great
very tangible
examples.
examples that I can give you right now, and I can continue, but
No,
uh,
no, no. Those are awesome, and it's two different perspectives from two different funds, which I love. I'll just say this again: those were other people's words about you guys being super friendly. I'll say you are super friendly, but I'll put the professional twist on there, which is what that leads to, which is your strength, is that leads to the fact that you guys have developed really, really deep, meaningful, long term relationships, right? Like that's the difference. Is that's how Marco always has been. That's how he is as a human. That's how Ian is as a human. That's how you are as a person. And you guys have made that your underlying operating kind of cultural truth, right? Is so you say, well, what one of our differentiators is our investors, our LPs, and the network effect, and like that's relationships, man. Like that is the quality of. I've been fortunate. I sat once at La Docena around the table with all your LPs and all your guys for Fund One, right? And it was like that was a group of really good people who were really aligned with doing good things to help other young entrepreneurs to build their businesses. Yes, because they want to make money on the back end, right? But that's it starts with good people. So don't sell yourself short there. All right, I've got two more questions before we get to our closing last question, our last segment. So these are a little bit more kind of philosophical. You can answer them long, short, however you like. One is the like classic, like let's look ahead a little bit, right? There's obviously we just talked about a ton of synergy, industrial synergy and trade synergy between Mexico and the United States, and nearshoring and sourcing of product and production in Mexico for American company, like so many interconnectedness here. What would, if you were looking forward, and you cannot say AI, this AI cannot be your answer. What industries in Mexico do you think are attracting like the most interest from investors now and probably over the next couple of years? Like what are the smart, important industries to watch for?
that's a great question. That's a great
Yeah,
question.
it's a harder question when you can't just say AI.
No, 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 because I don't think AI is one. I think AI is happening in other places, but it's like when I don't know, like when you're sick and they offering you, a big, nice, sexy travel to the Maldives. It's like I don't want to do that. Like I want to, like get healthy. So this is real for Latam. Like if you solve my problems with AI, do it. Just solve the problems. And so I think what excites me, it's more about like three things. One is health. I think we have a lot of opportunities there, and there is a lot of approaches on how to do that. The other one, which is probably not news, is fintech. There is a lot of opportunities in fintech, but doing it differently. I just went to Venezuela a couple of weeks ago to the Startup Venezuela Summit. Shout out to Esteban Torres who invited me, and it was a great experience because I, I didn't know about it, but there are huge startups in Venezuela that are just
Oh
doing
yeah.
business there, and nobody knows about it.
Dude, I've said since I lived in Chile in 2017 and I met so many Venezuelans, I've said that I think the best sales. No offense to everybody else, but I think the best salespeople, like the best like natural born salespeople who get it and who know how to build businesses and promote products are Venezuelans and Argentinians, right? Like the Venezuelans have like, in spite of all the crap that the politics has rained down on them in the last 20 years, like the Venezuelan people are just like deeply innovative hustlers.
I can agree with that. So it's I think fintech there is still a lot of room to provide services in a in an innovative way, and it doesn't have to be with AI necessarily. But if you can lever AI to do that, I mean that's great. And probably the third thing that excites me a lot is just like all the industries, like there's a
Old
huge
industries,
opportunity
yeah.
like in manufacturing, agriculture, these are businesses that haven't been disrupted for years,
Right.
and they're huge. When you see when you look at the Mexican stock exchange and you see the top 10 companies, they are all companies. They are like unsexy companies. There's no Google in Mexico, So,
Yeah.
uh, by the way, Google did great yesterday. But there is no Nvidia, there is no Google, there is no
Right.
Amazon, there is no. I mean, maybe Mercado Libre, it's the one, or Nubank, it's another one. But in
See.
Mexico, the biggest companies is telecommunications, retail, food and beverage distribution.
Again, big old traditional industries that are ripe for disruption, that have basically been run the way they've been run in Mexico for 80 to 100 years.
Yeah, yeah,
Yeah.
and
That's
and they're
fascinating.
and they're going to still they still be there for a while, but they want to do business better.
Yeah.
And if you have a startup that helps them do things better, you have a great space for innovation, and you're going to be I don't know if $1 billion company, but that's just a like a blurry line in the sky, but you're
Yeah.
going to have a
Yeah.
great business. I don't know if it is going to be above 1 billion or less than that, but it's going to be
Yeah.
huge. So yeah.
Uh, those are great. That's awesome. And the kudos to you for not including AI. And by the way, I say that just because I'm giving you a hard time. The truth is, your answer about AI is actually how I really feel. Like, I feel like AI is a tool still. It's a tool set inside of other solutions, right? It's gonna be used to make other things, not necessarily be the thing. In spite of the fact that all the hype monsters right now would tell us that it's the thing. And I'm like, it's a great tool. It's a hugely important tool, but I don't think it is the thing. Like, it's not the internet,
Yep.
right? It's so that's yeah. All right. So last question before we get to the bullet point kind of question to close out. What would be like one big misperception or misunderstanding about the entrepreneurial investment opportunity in Mexico that like gets in your way when you're trying to talk to institutional investors from outside of Mexico?
Like the one thing that probably is my biggest concern, and everybody's, I don't know if biggest, but a huge concern, is about exits. It's about like
Okay.
venture capital is about buying low and selling high. So you can buy low in Latin America, but if you cannot sell, like, there's no business. So I think that's a huge concern. And compared to the US, the M&A activity here in LATAM is very, very short. The stock exchange is simply not deep enough. So it's very challenging to have exits other than subsequent rounds, like selling in
Yeah.
secondary in Series B or Series C. So that's
Right.
that's the most common way of exiting, but it's not as profitable. So there's a lot of I think there is a lot of big businesses in like all Latam with the funds from like 2010, 2011, that still haven't sold, like they haven't find a way to exit that company, and they don't
Yeah.
want to exit because they know what those companies are worth, and they don't want to, like to take less money for what it is
Right.
worth. So
Right.
we have to find creative ways, different ways of exiting in LATAM. But I think that's one concern that most people have everywhere, and it's going to be solved by someone that is willing to think outside the box and not just waiting for someone to come and buy your company 8x multiple of
Right.
EBITDA.
So it's gonna require some entrepreneurial thinkers. That's good for me. That means I'm gonna have people to interview for the rest of my life. That's good news. All right. So last question, and this is gonna be fun because I'm gonna take you all the way back to your finance roots. So I'm gonna let you be the finance geek that I know you really are in your heart. Right. Give me 2 to 3 practical tactics that an entrepreneur or any entrepreneur should take to strengthen their financial and operating models earlier on in the development of their company or their idea. Give me 2 or 3 practical steps that every entrepreneur should be doing to strengthen their financial modeling
Mhm.
as early as they can.
I don't know. I have like a 2 hour course of finance finance for entrepreneurs. But I'll tell you three bullets that I've seen entrepreneurs get screwed eventually as they grow, and they didn't
Okay.
know where they got attacked from. So one is taking care of the cap table, and the best way of getting screwed in your cap table is by raising a lot of saves without knowing what is going on. A lot of entrepreneurs, they just raise a lot of saves with pre money and post money and I don't know whatever, like, and eventually when they get a series A and they see the consequences of doing that, they're like, oh my god, I just let go a lot of my company and I didn't know about it, so understand the consequence of raising what you are raising, and the way of doing that is to understand the mechanics of safe and convertible conversion
Okay.
when it comes to life. And the difference between pre-money and post-money, simple way of doing that is the amount of money that you raised. But in real life, it's much more complex than that. So
Mm,
understand those things, and I'm not saying that you're not going to get screwed, but at least you would understand why, and you would see it coming. That's one thing that I've seen a lot of times go through that when we invest in a Series A, and we have to correct everything, and it's very very difficult because you have to negotiate with angel investors, and you have to buy people in secondary, and like, you have to do a lot of things in order to correct that, and it's very very difficult. Sometimes the company don't have the time to do that, and so yeah, just that's one practical bullet. The second bullet is, I think most founders could, like, valuation is not the number one thing to negotiate with a VC. There's a lot of things to negotiate with a VC apart from valuation. So just try to bring the conversation to those other things instead of valuation, and probably you have more success. And what I mean is that there's a lot of ways to get your valuation with, I don't know, like, creative methods. If you use convertibles, if you the right way, and if you use, I don't know, like, some clawbacks and ratchets and some thresholds that you have to beat in order to, improve your position in the cap table. So if you come to me as a pre-money, as a pre-revenue company, and you say that you want $2 million and your valuation is, I don't know, 15 million because you don't want to dilute a lot. I mean, it is understandable that you don't want to get diluted a lot, but paying $15 million for a pre-revenue company, it's also seen as a lot.
see.
Again, VCs make money by buying low and selling high. So there's ways where you can have the same approach to a $15 million valuation with a more creative way of doing that. So
Kind
so
of a more well-rounded conversation, talking up the other value points, the other parts, like build the story, so to speak,
yeah,
that justifies that, that makes it exciting or palatable, acceptable to the VC,
yes, or
as opposed to just like leading with the number.
yeah, or what if you say to me like, hey, don't talk about valuation right now. What if we reach this threshold? You would get you would get 10% of the company. If we hit this threshold, you would get 7% of the company, and if we hit this amazing threshold, you would only get 5% of the company. It's going to be a much bigger company, so 5% of that one is worth much more than 10% of this one. So let me
Yeah,
prove you that I'm going to
it's
do that.
great.
So sometimes you don't even have to calculate the valuation, but the fact that the entrepreneur is so confident of saying that, and
Mm-hmm.
is willing to make a bet on himself as well, it gives, the investors a sense of, oh, that's interesting, like,
See,
and I think that I don't know if I want to get this conversation too polemic, but I think Y Combinator tries to standardize everything, and sometimes it works, and it's like, if you are between this and this revenue, so. valuation is 10, 12, 15. That's it. So when you have to evaluate thousands and thousands of deals and invest 140 companies per year, and now it's going to be more. So when you want to do that, you have to standardize things. But for most of the venture capital, you can get out of the box. Like
Yeah.
you're allowed to do that. So
And also, in fairness to the question and your answers so far, like we're giving advice to the entrepreneurs on how they can better position themselves, how they can better organize their financials, right? So whereas the Y Combinator model, like that's designed to serve Y Combinator to make it easier for them,
yeah.
and then lesser so for their portfolio companies. But that's great. Hey, you don't even have to give me a third piece of advice if you don't want to. Like, I feel like you just gave us half of your seminar right there. That was awesome.
Yeah. No, I can go through a lot of those, but I think those two are probably very helpful.
Those are big.
And
Those are. I mean, both very specific. One very very specific, and like it happens every time with safes and convertibles and not understanding them. And then the other with more of like kind of the how to be artful around the science of negotiating your valuation and your initial investments. That's awesome. This was great, buddy. Thanks for hanging out. People will never know that it took us like 20 minutes to get started on this because of technical difficulties, but now they will. But not, it's funny, as I was listening to you this last like 10 minutes, I was thinking to myself, like reflecting back upon my lovely life in Mexico. And I was like, man, I think this might be the longest conversation you and I have had since like 2019. Like that, like this has been really enjoyable. First of all, I'm always proud of you guys. You know that. Second of all, like to hear the SeedStars news and the vision behind the reasons behind the SeedStars partnership, and how it serves your entrepreneurs and your portfolio, but also just the entrepreneurs that you will serve and pursue and nurture over the coming years. And then how it also serves SeedStars. Like that's just really exciting as a guy who spent, 5-6 years trucking around Mexico to every other third tier city trying to help promote entrepreneurials. And it's really exciting to see you guys executing something that creative. I would say you're entrepreneurial thinkers in the way that you're approaching your venture capital firm's operations. And then knowing that it's not only going to win for you and win for your LPs, which is your job, but it's going to win for your entrepreneurs and all the entrepreneurs in the communities that you invest in. So that's fucking awesome, dude. Good for you. And then it's just nice to see you. It's just good to see you, buddy. You look well, and thank you for coming and hanging out with me for an hour and updating us all on what's going on with Redwood and Sensatera and understanding the Mexican and Latin American VC landscape a little bit better. I really appreciate your time.
Thank you very much, Uncle Rob. I hope to see you personally sometime in LA or whenever you come to Guadalajara. I'm happy to have you have some tequilas or beer or whatever you are doing right now. Actually,
I'm gonna drink some of that stuff, the recovery drink that you're gonna send me. Some of that product of yours that you're holding up.
Yeah, and also you should try just one extra commercial. You should try Cayo. I don't know if you have tried that one, but Cayo is it's like a social tonic. It's not alcohol, but it's great flavor, functionality. They have nutraceuticals, adaptogens, so it's very healthy. But it's also functional, so that's a good one.
I got to buy some of that. Thank you.
We're getting HIYO, Hayo.
We're getting all kinds of product recommendations in today's show. This is awesome.
Yeah.
I'm in the coming year, I'm going to need like half of these companies to become sponsors of our show.
My God, I would love
that. That's awesome stuff. I really appreciate it. Again, great to see you. Thank you so much, buddy.
Great to see you, Ralph. Have a good one.
Well, I hope you enjoyed that episode as much as I did recording it. As always, we thank you so much for listening and watching. Today's show was recorded here in Los Angeles and produced by the incomparable Deanna Bernal in Mexico City. We can only grow this show by you listening and sharing the show with friends. So please find, follow, subscribe, and share our audio-only show on Spotify, Apple, or via any other popular podcasting platforms, as well as find the video version of our show now available on our YouTube channel over at Entrepreneurial Thinkers. And of course, you can follow along on our various social media platforms for fun and informative clips and content at Entrepreneurial Thinkers, wherever you can find us. And if you'd like to connect with me, you can find me at I Am Rob Ryan on just about any social media platform. Gracias, thank you, and have an awesome day.